There are a lot of positives going on within Peloton that we think are lasting. So first and foremost, it's just a change in consumer behavior that we think is permanent. You know, we've been talking about e-commerce for some time. I think your prior guest just talked about that. And frankly, I think as travel sort of comes down and maybe gym membership becomes less so than it used to be, folks are staying at home more often. And most importantly, when you think about working out and exercise, we find it hard to believe. We have a hard time finding a better solution than what Peloton's offering. In addition to that, you know, you think about the content they offer, the community, the convenience, and all wrapped up within connectivity. You know, I think the downside is actually limited only because all those three C's, if you will, can continue to drive this change in consumer behavior.
Although you're nearly doubling your price target, you were at 59 before, now you're at 109. So what is it about their financials that say to you that kind of move is justified?
Sure. You know, it's all about the subscriptions, all about the subscribers. And so, you know, the company exited their fiscal year third quarter, or call it calendar year first quarter, in a pretty strong way. We know they passed 1 million subscribers in early May, and we believe that based on our data around delivery timeframes that continue to be extended out relative to what should be normal for Peloton, based on our analysis of engagement, we think more subscribers are joining at a faster pace. We think that churn is actually coming down, so it's getting lower. And all this with a company that is pulling back on marketing spend because word of mouth is now at such a level with over 1 million subscribers that can continue to power forward. So, you know, we feel a lot better about how we value the subscription side of the business. That's where the majority of the value is, though, of course, with every subscriber, connected fitness subscriber, $39 a month, comes a bike or a tread. And that's and all of those are very strong growth margin or gross margin and contribution margin positive that can drive profitability too. So, you know, the change in price target has a lot to do with our underlying confidence and just how strong the subscriber growth really is, and their industry leading products. And again, that content, that community, that create the convenience, things that others can't really do. It's that network effects that makes Peloton special in our view.
Couple of questions here. Number one, as you look at the numbers, do we really know how many people have bought these bikes and how many people are subscribing? It's a beautiful business model. Sell product, sell subscription. I have one. It's been the only in-home gym product I've ever stuck with. So that says a lot, believe me. But I look at those numbers of the people who are taking an individual. It's 50,000. It's 80,000 who are taking individual classes. And I go, that can't be right. So that's question one. What are the real numbers about uptake here? And number two, what's their moat? Somebody else could come in and do exactly the same thing and undercut them.
Yeah, those are the great questions. I tell you, we've had a bike for 4 years now, and our engagement or usage of that bike has gone nothing but up and to the right, which is pretty wild. I think in terms of numbers, I mean, we think that they ended the quarter with about 1.1, a little bit over 1.1 million paying subscribers. We know they have over 2.6 million members. So that's about 3 members per paying subscriber thereabouts on the past quarter. So look, if you over 1 million subs, we think they're getting close to 5 million by 2024, 2025. And as you put all that together, that's a lot of bikes and a lot of treads to sell.